Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, March 7th. Hope you guys having a great day. Hey, we do got a couple economic data. Remember, this is jobs week, so the second item of this week is weekly jobless claims on Thursday. So tomorrow we'll get the big number from the BLS jobs report. So we'll get the jobs numbers there with the unemployment rate and everything else coming in tomorrow. So tomorrow will be the biggie. But today's a good day too. We got the weekly jobless claims. So last week's reporting came in at 226,000. The forecast for this week was 225,000, and it came in slightly under at 223,000. So good number there. We're starting to see, more realistic numbers. We had a little bit of a spike, which we thought that might be aberration. That was more seasonal workers going on unemployment, and things would taper down. And so far, we're starting to see that these last 2 weeks here. We also got productivity for fourth quarter. So third quarter, the final revision came in at 1.8%. So fourth quarter, we expected about the same here at 1.8, and it had a slightly better productivity in Q4 at 1.9%. Last but not least, we got unit labor costs for Q4. So the final third quarter increase of labor costs went up 1.6%. Forecast was supposed to have a slight dip at 1.5%, but it came in a little bit hotter at 2%. So of course we're going to keep our eyes on that because that could be inflation leading right there. Headline news: stock market is down today. Basically, it's taken its cue. We got some data that's coming out of Europe. We got the ECB coming in talking about how they're not going to raise any rates, at least a pledge that they won't raise rates until end of the year. They're going to extend long-term loans. They reassessed their forecast for 2019 and brought it down from 1.7% down to 1.1%. So again, this is kind of leading to the concerns that investors have been having, and just a reminder that yes, the global economy is slowing down a bit. So that's kind of what's bringing the stock market down. Dow is down over 200 so far this morning. We do got a few more Fed members speaking today, so we haven't had much disruption with that, or they could have some. We did get the Fed beige book later in the day yesterday. That was what kind of brought the markets down further because, again, it was a bit of a reminder of the economy slowing down, even here in the U.S. a little bit. We got things, the market kind of slowed things down. Of course, the government shutdown in January did not help matters either. So, again, that pulled back a little bit. Of course, we'll be watching this further, but in the meantime, that's what's on their minds. So let's take a look, see how this affected the bond market. Bond market is doing better. We're up 9 basis points right now. That could translate with the start yesterday to today. We were up, I think, 2 basis points yesterday and closed up 6 basis points, and now we're up another 9 basis points on top of that. That could lead to a little bit better pricing today, help us out a little bit. So that's a good sign here. And on the other side here, we had the 10-year Treasury dropping. We closed up at 2.69 yesterday. Now we're down to about 2.65. So that's a pretty big drop in yields, what we got here so far. The coupon's a little bit higher, but the yields is kind of what we're looking towards, and the yields have dropped a bit, which is, again, a plus, adding less pressure on mortgage-backed securities, which is kind of helping us out here today. So, again, that's pretty much a wrap for the day. So rates are either about the worst case scenario, about the lenders going to price in about the same or unchanged from yesterday, but some lenders may even price a little bit better today due to where we were yesterday to where we are now. Again, so that's a good positive sign. Definitely want to see if this continues. Otherwise, again, if anything else changes, I'll definitely put on Twitter. You can follow me at Mike Bjork on Twitter, so get your latest updates over there. You guys have a great rest of your day. Thanks so much for watching. We'll look forward to see you guys tomorrow. Bye-bye.